In Investing 101, big banks made millions on the tariff turmoil in the stock market as investors shifted around their retirement savings. We have Ben Connard standing by. Ben is the principal director at Carnegie Investment Counsel. Good to have you here. Investors have much to consider with trade talks and Fed decisions on interest rates, and that means uncertainty is back in the air. What can you tell us about investing now?
Uncertainties due to tariffs, and while Trump delayed them a few months ago, that deadline is over, and now negotiations are back on. It doesn't look like they're going to be settled this month. It'll drag into next month and probably into September. What does that do? As far as the Federal Reserve is kind of on pause. They're waiting to see how these tariffs affect inflation. And so they're a little nervous about taking action, and their action would be to cut rates, but they don't want to quite do it. So you have the uncertainty of the Fed and the tariff, and it combines for overall uncertainty in the market.
What are your investing tips?
Well, I think it boils down, you got to understand the fundamentals of a company you're looking at and how it will affect them. And when you look at a company, they can project the upside, but you got to worry about what's the downside. What can happen to them? What can happen to them if interest rates don't come down as expected, or the tariffs are much worse? And so you know, if a company's overly dependent on a supplier from one region and that region could end up being whacked by tariffs, maybe you want to avoid that company. So you want to diversity in the supply chain. And then interest rates, if it's a highly levered company, perhaps you'd be a little more concerned, because it's like, well, they need interest rates to come down. But if they're not coming down, then what happens, and what kind of downside do you see there?
Thank you, Ben, for sharing your expertise with us.
No problem.